Hello there, Mavericks. This is Rob Reinhold. It is the Market Roundup. Here we are 1 week after the election. Let's go ahead and get into it. In this session, we're going to be going over the news of the day. We're going to be taking a look at the equity markets. We're going to be really focusing on the bond market and the dollar as we're starting to get into some fairly high levels. And as always, I've got 3 trades for you, 1 bull, 1 sideways, and 1 bear.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, let's start off with the news of the day. So we got a pullback from all-time highs. We got a huge surge after the election. Look, no surprise at all. We're going to have a little bit of a pullback. But the one thing I do want to focus on is the bond yields. These bond yields since the election have been rising. And we're now getting to these higher levels than we've seen in a little bit. And at some point, this will start to put a little bit of pressure on the stock market. We haven't seen it yet, but it's definitely something to keep an eye on. A strong dollar, a strong high bond market, that's going to really have a headwind for stocks. But the market, you can see, pulled back a little bit. We had a pullback of 0.8% on the Dow. The S&P and the NASDAQ, lower pullbacks. Russell got absolutely hammered to down, almost down 2%. And we've seen oil and gold trading down from, at least gold from recent highs as well. Oil's been definitely hanging out around that $70 area for a long time. Looking at the market internals, we could see that for every 1 stock going up, there was 3 going down. And we do not have a crazy amount of stocks trading over the 50-day moving average. And this is a little bit, I don't want to use the word concerning, let's use the word curious. How we could literally be at all-time highs, just having a huge rally, and about half of stocks are trading above their 50-day moving average, which tells you is that this rally has been pretty concentrated in some of the bigger names. Let's go ahead and take a look at the charts and see what the charts are telling us. Looking at the S&P, we had a nice rally off the election. And look, it's no surprise. We went from 5,700 up to 6,000. Again, that's a huge move. There's going to be some basing or pullback. So the only question we have here is it a base? Is it a base where we keep going sideways for the rest of the week? Or is it a pullback where we actually pull all the way back to maybe this 5,900 area before we get a bounce? As we know, anything can happen in the markets, and we could have a big up day tomorrow. We could have a gap down 10% tomorrow. Very unlikely to happen, but we have to understand we're just playing probabilities. The probabilities say that we're likely going to be hanging up in this area. And again, I don't know how deep it's going to get. It could get all the way down to 5,900, or it could just hang out up here at 6,000. But I think this is the range here for this pullback until this pullback is over. And again, all the pullback or the base means is that there's no longer an imbalance of buyers versus sellers. There was a clear imbalance of more people buying than selling right here, clearly. We've now gone to a more neutral. The big question is, does it then tip down to where now people are profit taking more than the buyers are coming in? And that would be a pullback. Or is it just leveling off, giving a chance for everyone to take a breath before we break out and go higher? To me, that's the only question about the market here. The bullishness of the market is absolutely clear. We come over here to the NASDAQ. It's clear. It's just the same story. Okay, we had a huge run, and after huge runs, we typically need a breather. Is it a base or is it a pullback? That's the only question I have in my mind here. This market is definitely trending to the upside. Taking a look at the heat map, and we can see that the buying was concentrated in the big large cap names, Microsoft, Nvidia, Apple, Google, Amazon. Other than that, there was mostly selling across the board today. But that didn't change anything. This is just a pullback. We could pull all the way back to that 5,900. I don't think we do. I think we probably get closer to that 5,950 area, maybe 5,925. But I think this is going to look more like a base than a pullback when it's all said and done. So I'm still looking at a +3 market, still looking at being bullish, but not looking to add things on like right here, right now. Like, is this the right time to load up with a lot of bulls? No. We just had the big run. Let things cool off a bit, and then we can get into things. Or if you're not willing to do that, just make sure that all your trades have enough time for it to work out. All right, I got one bull, one bear, one sideways for you. Let's jump into it. The first one is Norwegian Cruise Lines, NCLH. Now, these have been just bulletproof lately. They've had huge runs, and I know what people are going to say, Rob, this thing was like $15 just a month or two ago, and now it's at 30. This thing's already gone up 100%. I know. That's how big of a supply and demand imbalance there's been. We've run, we've based, we've run, we base, and this is one of my favorite patterns called the high and tight base, where you have a run and then it just refuses to pull back underneath that last candle. A lot of times these go for 5 candles and they break higher. Look, it could pull back, no question about it. We could pull back and have a very nice pullback to a buy point. On this one here, I want to make sure I just have enough time for it to work. I've got 29 as my target. 29 is my target. So I'm looking at like a 27-29 bull call spread. If you want to tighten it up in more, 28-29. I think if you want to go out to 30, I think you've got to go probably into December for your expiration date on NCLH. If you don't like that one, check out CCL, Carnival Cruise Lines. It looks good as well. Next up, Microsoft for sideways. Microsoft has not participated whatsoever in this rally. So it's telling you that it doesn't have a crazy amount of supply and demand imbalance here. The moving averages have completely flattened out. And you can see that overall, the high and the low of this is 406 up to 440. I'm going to be taking a look at something a little bit more, again, by the moving averages. I want to go up to like 430 on the upside, probably down to 410 on the downside. So as you can see, this is a little bit bearish since the price is at 423 and the midpoint is 420. But I want to go out either to this Friday or next Friday will be the expiration on this sideways. So just asking this thing to go sideways for either 4 days or for 11 days. That's what this is looking for. If Microsoft hasn't broken out yet with the markets at all-time highs and looking tired, I doubt it's going to break above this 430 area. If we get a nasty sell-off, it could go below the 410. There's no question about it. But I also don't think we get a nasty sell-off either. Looking at the 410, 420, 430 butterfly on Microsoft. And on the downside, we've got SMCI, Super Microcomputer. This stock is in some serious trouble. This big gap that we see here is when their auditor basically said, we are no longer auditing the company and we are withdrawing our financial statements that we produced for this company since we've started business with them. What that typically means is accounting scandal, meaning they were lying about their business. When there's an accounting scandal, most of the time I see these never recover. I shouldn't say never recover. They could eventually recover. But while the accounting scandal is going on, they are really in trouble. And you can see there's been some bounces. There's been little bounces here and there. And look, these are not small bounces. 24 to 28. This bounce was 20 to 26. I mean, we're talking about 20% bounces. But this one, to me, looks like it is going lower. Yes, it would. If you could get this on a bounce, if you can get this on one of these little bounces, probably a better entry point. But on this one, like I said, as long as you give yourself enough time, I think you're going to see this thing well below 20 here in the near future, which is why I'm going to use that 20, and I'm going to go with like a 20-23 bear call spread. That's going to get me about $1.50 of upside. I got $1.50 of risk. Yes, I could go more aggressive, but the market's at a +3. I don't like to go super aggressive on any bears when the market is a +3. Let's talk about tomorrow. So I'm going to call this the election hangover. We went to the party. Everyone had some drinks. It was a great while lasted. And then, we all just got a little tired. We all got a little tired and said, hey, we got to chill out for a little bit. I would not be surprised if this lasted for the next couple of days. For me, the direction of the market is very clear. It wants to go higher, but we do need to keep a look at these rising yields. We are trading at 4.43 here, and I want you just to look back and see that where we've come. If we get up around that 4.7, I think that's going to be some real trouble in stocks. And if you take a look at this date, when we hit our high in April 30th, we can see that the SPX actually had a pretty big pullback. You can see April 30th of this date right here. Now, I'm not saying that that's the exact reason why there was this big pullback, but they are correlated for sure. So I'm looking at just these yields. If they start to go a little bit higher, I think there is reason to think that pullbacks could get deeper. But you can see on that SPX chart, the market recovered and went substantially higher. I think the market is still bullish. I just think as these yields go higher, the likelihood of a larger pullback becomes more and more possible. Tomorrow we do have the CPI reports, looking for a plus 0.2 headline number, plus 0.3 core, 3.3% year over year. Look, that's about where we've been. If it's a little hotter than that, the market's not going to love it, but I don't think the market's going to freak out either. But if we start having 2, 3, 4 of these reports that are hotter than expected, I think then the market's going to have some trouble with it as well. The only earnings report of note tomorrow is Cisco, and we're pretty much out of earnings season, so that's really all you need to worry about. This is the Market Roundup. See you, everybody. Goodbye.